Hello folks, welcome to another Bitcoin market analysis by Inspocrypto. As mentioned last time, Inspo is back. And Inspo will change something. I will continue providing their market analysis as usual every second day, so 3 times in a week, until Phoenicia Academy is online. But I will start to provide a little bit more stuff, different stuff, other insights that you usually would expect from me. Obviously, everything related to global markets, monetary policy, and so on and so forth. So today I will start something like a series. I will start like a podcast about what will happen or what I think are the trends of the banking sector of the future, of the next coming years, and how it will have a bigger impact not only to the markets in general, but also to you, your families, your income, your future in general as well. It will have an effect also to you directly. So we will start today with an article that I was reading from Reuters that was shocking me a little bit. And I started to make an analysis just also to point out what the impact will be to different levels. Okay, so one for the banking sector in particular, but also to the global economy on the other side. So that's what we are going to start today. So let us start today with the first article provided by Reuters. Friday we will have another one, and Monday, Tuesday is holiday in Germany, but that's another thing. I mean, I'm not going to provide any analysis Tuesday anyway, but Monday. So Monday I will provide the last part because we are going to talk about 3 different articles who are linked each other because it will have similar impacts to the global economy, to the banking sector, and obviously also to you. So let us start with the Reuters article. I did a little summary because otherwise it's going to take much more just to make the introduction. So let us start with what is happening, what is the topic of the whole thing. Robert Holzmann is a member of the European Central Bank Council, advocates for a substantial increase in the minimum reserve requirements for commercial banks, with the ECB proposing up to 10%. So what does it mean? I mean, usually when you are expecting a big collapse, a market crash, whatever, maybe even a bank run, what you want to do is that banks has enough liquidity. Okay? So in case you are forecasting bad times ahead, you would force banks to increase their minimum reserves just to have more money in case of. And that's what Robert Holzmann, the member of the European Central Bank Council, is advocating. At the moment, it's 1% of the customer deposits that's required as a minimum deposit. He is advocating and requesting, even demanding, to increase that to 10%. That's really big. Now let us go forward. Holzmann expects such a move would be unpopular among the banks. No, really? Potentially leading to an uproar to the banking sector. The Federal Association of German Banks has rejected such a proposal, asserting it acts as a tax on bank deposits and restricts banks' ability to offer higher interest to savers. Obviously, that could be a direct impact to your wallet if you have enough money, deposit or whatever, on your bank. According to them, the decision by the ECB to no longer pay interest on the minimum reserve will reduce the interest income of European banks by 6.6 billion over the next 12 months, impacting German institutions by 1.8 billion. One of them, obviously, Deutsche Bank. And they have a big lobby as well. So we are not only talking about that they just want to increase the minimum reserve, they are not going to pay any kind of interest to the or on the minimum reserve anyway. And believe it or not, but Holzmann has or is getting even supports by, for example, the German central bank, that's the Bundesbank, and its president Joachim Nagel. So just saying, obviously such measures wouldn't be imminent, but why not? The Spanish central bank president Pablo Hernández de Cos, on the other side, is just very shocked and reacting very negatively to such an advocate by Mr. Holzmann. Because, I mean, that would just indicate a very significant change of their policy against the banks. But the question would be now, does that matter? I mean, we can say, hey, those banks has a lot of money anyway. So, yeah, better to have a little bit more buffer or space in case of happens, so the in case of scenario, something big happens and they have a bigger reserve so I can get my money back, for example. Why not? If a bank run would happen or whatever, the money would be there. But what does that mean for the global economy? What does that mean for the European economy? What does it even mean for... We don't need to talk about big banks like Deutsche Bank, who are almost just eating every single other bank, Commerzbank, a big one. It's part of the Deutsche Bank group. Postbank, a big one. It's part of the Deutsche Bank group. By the way, it was pushed by the German government. They said to consolidate the whole banking sector in Germany. Means we need bigger banks and no small ones. Because they say small banks would be a risk for the economy. Well, I'm not sure, because we all are crypto fans, I would say. And we like more decentralized approaches more than centralized ones. What they are doing is more to push the whole banking sector to be a centralized entity instead to be decentralized. In my opinion, to have a decentralized structure would minimize your risk, because in case of a big bank collapse, let us talk, I mean, we are experienced now, FTX collapse. Obviously, we have other exchanges out there. And the crypto market not only depends on one single global, and that's a big difference, global entity. But when we are talking about the banking sector, it looks just a little bit different. So does that make sense? Let us go and analyze a little bit this, let us say request or demand by Mr. Holzmann, and what would be the consequences for the banking sector in particular, but also for the global economy. So what does it mean when banks have less liquidity? Because, to increase their minimum reserves means they are getting less money from the central bank as well. So less liquidity to, for example, to give you a higher interest rate if you are safer, for example. If you have some deposits and you want to get some yield for it. So that would be one thing. They would obviously then, as a consequence, reduce the profits of banks. As mentioned, big banks, maybe they would be in a better position than small banks. So what will happen, and I'm not going to make any teaser for here, but it would happen something like what in the US is happening right now. As mentioned, I'm not going to teaser, but where big banks are just acquiring smaller banks. And that's happening. That's a trend right now in the US. Another one is, obviously, it will have automatically a market reaction. Stocks. I mean, if they need more money and block and lock them for their minimum reserve, they will start to sell some assets to reduce positions in the stock market, futures market, and reduce a little bit their, operations in that area. So obviously that could also and will have, in case they execute such a step, it will have automatically also a big impact to the global, or at least it will have to the global, but to the stock markets, to the future and financial markets in general. But if you know the banks, you know if someone is trying to kick their asses, they will try to find a way to avoid that. So means they will look for alternative investments where they can get higher yield, just to neutralize the cut of profits, for example. Also means, hey, welcome to casino, because we know what they are doing. So they will start to create new strategies with a higher risk. So when we are talking about reward risk ratio, the ratio will be very unbalanced, because it will go more hitting risk. So the risk and the reward both together will increase. Something where I would say that shouldn't be the motivation of a central bank council. On the other side, as we talked, they will have less liquidity available. So obviously another consequence of such an execution will be the reduce of lending. And that will have an impact not only to the Eurozone, but also globally. Because it will push a slowdown of the economic growth. We know in what situation we are, Euro, but Germany in particular, and also what's happening in Asia, China in particular. So is that maybe one step that's going to fix problems or just to escalate problems? Just to reduce right now, while we had a very tightening monetary policy, now to go one step further. You remember when I said in the past, banks are yelling for liquidity because of the tightening monetary policy in the US, but also in the Eurozone. Now imagine one thing on top. It's also to dictate, hey, we need more reserves just to be safe in case of. But they are creating this scenario at the same time. That's unfortunately what's happening. And obviously, usually, and that's something you will see every time when that happens, when banks are getting less liquidity available, they start also to slow down their investments to innovative projects and so on and so forth. But I mean, that's nothing where we need to talk about that, but it's obvious in my opinion. But another thing, and that's has much more political character is that even in Brussels, that it's a lot of how to say that, but it gives a lot of potential discussions in Brussels itself, because the banking sector has a big lobby. Just to bring such a topic on the table, while the ECB was increasing the interest rates to levels that we haven't seen since now 2 decades, I think, 2 decades, where banks didn't have the time just to adapt to the new situation. Also something I have mentioned in the past and described as a professional in the banking sector, that for a bank it's absolutely almost not possible to adapt itself to the dynamic changes of a market, financial market, because it's like a huge container ship. It's full of processes. Even if you want to change a small process, it will trigger a bigger process behind, and that takes time and resources. And I mean not only resources, human resources, but also monetary resources, money, a lot of money. Maybe you remember when we talked few months ago about the Deutsche Bank, consolidation of the banking sector, motivated by the German government, where they pushed the Deutsche Bank to acquire the Postbank, to acquire the Commerzbank. Then after all, the ECB did a request to the Deutsche Bank asking if they would be ready to launch in the next years the digital euro. They denied. They said no, because we are still, and they are still, after 8 years now, still integrating the Postbank and the Deutsche Bank. And that's one big one. We have the Commerzbank, and they acquired their Commerzbank 5 years ago, 4 years ago. So now imagine. So it's just a lot of different changes that doesn't allow them to react that quick. Something that it seems some politicians missed before they started to push the Deutsche Bank to buy other competitors, to consolidate, to make the whole banking sector just safer. I'm not going to tell you about my personal opinion, but I guess you are hearing my personal opinion. But however, I don't need to agree with what they are doing, but fact is, I don't think that what they have in mind is going to bring more stability to the market, and will bring more fairness to the whole market. Because consolidation, monopoly, isn't that a good consolidation of the market? I don't think so. But we will talk about Friday, where I'm going to tell you the next. I'm going to tease a little bit, but next Friday I'm going to talk a little bit about the announcement of different central banks, like the US Federal Reserve, the Bank of Japan, for example, where they declared their monetary policy measures, and also here the impact to the banking sector and global economy. And next Monday, to finish this series, we will talk about the conditions or situation of the US banking sector. Because what's happening in the Eurozone, in my opinion, is what they are creating to have the same what's happening in the US. As mentioned, where the big four will get just bigger, and the small banks will disappear, and we will talk about the whole policy, the whole idea and the approach. And that's what we are going to do Monday. And we will talk obviously also here about the impact and consequences for the banking sector in the US, but also about the effect and impact to the global economy. That's it for today. I hope you enjoyed. I mean, it's just to give you a better insight what's happening behind, because everything what we are going to talk about will have an impact not only to the global financial markets, but also to crypto. And maybe that's something we can talk. In case you have any questions, feel free to drop a line if you don't understand something, or if you want to go further, if you need more background information, if you want to know, hey, okay, that's interesting, but how can this have a bigger impact to the crypto market? Just drop a line. Every single comment is very welcome. So now let us talk about the market and what Bitcoin is doing. Liquidating you. Oh, well, I hope not you, but a lot of retailers, it seems. So let us go forward. So, wealth ratio. By the way, I'm collecting some information about Binance, their situation right now, because I think that will also have a bigger impact to the market. Wall Street Journal just published and provided a very interesting article, in my opinion, and we will also talk about that, but I guess next week. So in case of, just remind me about that, in case I just I'm delaying it or just forgot. Sometimes it happens. So, but we are now talking about the wealth ratio, what the market is going to do. We are not going to rush, but we are going to make a quick overview. Checking here why my lovely Epic pen is not working here. Hello? Why are you not doing it? Okay. So now it works. We can see that the wealth ratio 30 days moving average is in downward trend. As mentioned just before, everything was indicating a big preparation where they were accumulating bitcoins on centralized exchanges and sending more, while the price started to decline. Then it started to lift up, but usually when it starts to decline, it's also indicating they are preparing the big one. So usually it's indicating that they will dump big or distribute, and it doesn't look like they are going to dump. They don't want to generate any fear, not yet it seems, but they want just at the moment distribute, and that's what they are doing. We can see that yesterday we had a wealth ratio of 43%. That's absolutely okay. Also here it's very sharp, the view and trend that it's a downward trend. So usually we should go down, then up once again, and they start again. We are talking about tiny cycles where they accumulate quick, push up, start to distribute. But what I'm seeing or detecting is that they are distributing more than they have accumulated before. And that usually gives you a trend of pure distribution. If big guys are distributing, while even Binance is noting a very drop in market activity, I mean, volume, but market activity from 70 to 35%, that's huge. The biggest exchange worldwide. Now, you can imagine that if you want to sell big without to dump the price big, it's going to be a big problem. While at the same time, you have miners. And miners want to sell at the moment as well. We are just noting all these big, but yeah, relatively big outflows from miners to centralized exchanges. So anyway, if we go forward, we can see here, for example, you remember where I said we should go up. I was indicating 27, maybe even 28. It was a pump and dump, up and down. This here usually never ever indicates it's going to be a bull run initiation, for example. It's just indicating you they are planning the next leg up. But as you see, it was up and down. While stablecoin reserves are lifting up, while you can see that the weights ratio 72 hours moving average is hitting 90%. Something that's key. When we are reaching the 90%, usually the price starts to decline. So at the moment we are maintaining a price between 26 and 26.5. That's what happened. And if you really went here long to go short afterwards just to trade a swing, congratulations, that was a really good trade. If we check here the net flow, it's indicating, not big at all, absolutely not big at all, but it's just indicating that right now they withdraw more bitcoins from centralized exchanges than deposits. So let us go forward. So if we start to talk about liquidity analysis, we see the live net flow premium, something I would really recommend to every day trader or everyone that wants to have a better sentiment what is happening with the liquidity, or mainly the transactions related to Bitcoin. The monthly was red today after we pushed up to 26.8, and now it's green. That's why I say it's sometimes really interesting to see what's happening, and it gives you a better insight about what will happen next. So what we see is that they started to accumulate bitcoins just before they pushed up the price and started to decline. Later on we will check the spot volume ratio to the futures volume, and you will see that the market is mainly on favor of futures. And if you are a big exchange that is noting a drop of crypto transactions, so trade transaction on your own centralized exchange, from 70% to 35%, you are going to look for alternative income ways. And that's liquidate your own customers. High leverage positions. Because, less volatility, higher the risk. People will use to make their bets leverage. Okay, as the price is not really very volatile, not making any big changes, they will start to raise their leverage. Because in case of it goes then up, I will make my money. And I think they know that. So they are artificially sometimes creating such pump and dumps just to liquidate both sides. That's their cash flow. Hey, they need to pay at the end of the month the bills. Thanks to help them. So if we go forward, once again, we can see here on a better way than here, for example, but we see that was very well prepared. Anyway, the Bitcoin balance on centralized exchanges has declined. It is a very low level, I would say, so indicating that many have just withdrawn their Bitcoins from centralized exchange. And nothing have changed since my vacation. I was talking about in July, I was talking about that in August, where I said it feels like a bank run. And yes, if Binance is really in such a very weak situation as a whale, you will not just let your Bitcoins right there. You will put them out to a safer environment. Maybe another centralized exchange or cold wallet, whatever. So we will see, but we go forward. We go forward. Yeah. So also here doesn't look great. What we are seeing here is in the last 24 hours we received 400 million in value, 400 million in crypto, but at the same time a withdrawal of almost 200 millions in USD fiat. That's a red and very bearish balance because it's indicating they are selling. They are sending bitcoins, they are selling ethereums, they are selling crypto assets to centralized exchanges to swap them to fiat. Sell them. That's what's indicating. Obviously, we can also see here that in the last 12 hours, for example, the whale funds, they send 600 millions to centralized exchanges. At the same time, they withdraw 760 millions. They send 538 millions in bitcoins to centralized exchanges. And only we see here an outflow of 260 millions, indicating we have here a gap. The question is, if they only sold for 260 millions yet, we still have bitcoins for 260 millions almost still on exchanges waiting. Well, and we have Ethereum and we have XRP and so on and so forth. If we check the fear and greed index, nothing has changed. It's indicating fear, but well, it's 44. If we make 45, it's greed. So nothing have changed. Nothing. Really just nothing. Yeah, we go forward. We can see here, for example, custom range inflows. That's really, really, really negative. But to be honest, don't ask me what it means. I don't know. Coinbase. Now it's back. What the hell happened here? Okay, who cares? And what we see in the last 24 hours, we had a bigger withdrawal or a negative balance to the inflows. Even in the last 7 days, it's almost neutral. In the last month, it's really red, indicating minus 370 millions. Spot volume, it's 2.5 billion. 24 hours open interest, we are talking about 24 hours, is 7.1 billion. If you want to make cash, that's your cash cow. Liquidate them and you have money. Now, if we go forward, crypto weights provided by unusualweights.com is still indicating that weights are selling with almost 64%. They only 36% of them are buying. They are also saying that they are mainly using at the moment BTC USDT, but also BTC USD. I don't remember before my vacation to have seen such a high participation by BTC USD pair before. And that's just indicating someone is selling and swapping directly to fiat. TUSD looks really weak with 7.7%, also something that I didn't see just before my vacation. Binance, you remember we had even 98% before. 98, sometimes 96%. Now Binance is here. When we are taking a look to the exchange breakdown, we can see that they have only almost 56%, while Bitfinex is getting the remaining 44% in favor of Bitfinex, because it was 4, 5, 6%. By taking into account that Binance is not providing any direct BTC USD pair, only Bitfinex is doing it, it makes of course sense that those here are together and linked, indicating whales on Bitfinex, or is Bitfinex, is Tether maybe doing it? Who knows? But something is behind, because otherwise I couldn't have any explanation for it. So that's mainly it. we can check. I really don't know. Sometimes I'm checking the blog just to see what hedge funds are doing on CME, if they are doing something, and they are indicating, okay, they increased their bets against Bitcoin. Hedge funds have 1.4 billion. Arbitrage could play a role here. Also here, for example, just 80 millions up. Okay, that's a big difference. Still looks bearish to me. If we now check what stablecoins market cap are doing, we see here it continues dropping. If we go now to Tether, market cap, well, it moved directly. Very, very interesting, because it looks like they used this money maybe just what happened now, 7 days. Yeah, okay, so let us see. That was today. I could imagine that was someone using Tether who drive the money today, the market today. On the other side, USD dropped a little bit, just by 10 million, no, 30 millions or something. So they burned some and reduced their market cap, but nothing big. Let us go forward. So yesterday, because that's always 1 day delayed, we can see the funding rate related to futures started to lift up, like the open interest and leverage ratio, while the Bitcoin price was declining. Yesterday they liquidated 117 Bitcoins in longs and 73 Bitcoins in shorts. So absolutely nothing to tell here. When we check the blockchain whispers, we still have a very, in my opinion, bearish balance, a bearish ratio, where we have a bigger expectation of that the price will go up and less expectation that the price will go down. That's why traders are less in shorts positions and more in longs positions. Usually the market do exactly the opposite. On Bitfinex, nothing has changed, 49 millions versus 2.4. They didn't break the 2.5 billion yet, so also indicating here nothing has changed at all. So thanks to the spin on the Kingfisher, today we can see what's happening here. We see bigger positions, long positions on Binance, less positions, short positions there, but high leverage positions once again hitting 27k on Binance, even lower. So obviously it should attract Binance to liquidate them as well. That's it. Let us go forward. Thanks to the Levitors Angels, the app works today again. If we check here, they did some changes. Once again, I mean, I like progress. That's not a question. But, you know, don't crash the party with it. So if we check here, we see, oh, maybe I need to refresh because it looks a little bit different. Yes. Okay. So again, let us make 45. So bulls are just demanding 27k, while bears are demanding 26k. 27 is where bulls and bears will fight once again. Just related to the gamma exposure will indicate that bulls could win the fight in that case. If we check the BTC Gamma Exposure Index, the GAX, it's indicating it's still more in favor to go more down with the price instead of up, because we have a GAX of 70,000. So if we go forward, I think nothing has changed to the max pain expected to this Friday. If we check that, expiry is September 29th. We have a max pain of 26,500, and I would even expect nothing will change. We will maintain that price, and we'll see afterwards what will happen. If we go forward, we can see, for example, October 27th. That's where we will see a max pain of 27. If we go forward, for example, for November 24th, also 27th, and the moment, nothing, all these max pains without the incoming now in September and the last one of the year in December 29th are the most important, because we are talking about quarterly expiries, and those are really important, but not October, November. Nobody cares. It's because of the volume. If we check now December, also 27K, indicating, we will maintain such a range between 26, 27, go up, liquidate them, and so on and so forth. At least based on max pains. And obviously based on the expiries, the biggest one, the quarterlies. If we go forward, we can see that for me, premium USD is the most important one. We have long synthetic, custom strategy, short straddle, and put calendar. Some volume came back, it seems, so it's absolutely interesting. So we need to check now. Long synthetic, what's happening here, and explain a little bit what's behind. So the long synthetic is just something like similar, but it's not the same like a long futures. So obviously he is expecting that the price will go up instead of it goes down. The only thing, it gives him the opportunity to use less liquidity to make such a bet, for example, like in the futures market as well, but it's based on options instead. So basically it works very simple. The investor buys, or the trader buys, a call option which grants him the right to buy the underlying asset at a specific price or before expiration. Short put at the same time. He sells a put option with the same strike price and expiration, obligating him to buy the underlying asset at set price with a put option. Buyer chooses to exercise it or not. It depends. But if the price goes up, he is the winner. If the price goes down, he can make a bigger loss. So it's almost the same, absolutely the same, like like a futures long, but it's only based on options. That's the only thing. But basically it's almost the same. So if we check here the premium USD, we can see that, for example, they purchased calls 24K. So for December 29th, and also here calls 24K for end of the year. So just indicating that he is expecting to maintain a price above of 24K, and that's going with a coming expiration. He will have a higher leverage and making some money with that. That's almost it. So if he knows we will maintain a price of 27K, he is on the good part. I don't know how much money he can do with it, to be honest. I really don't know. But yeah, it seems someone, because we are talking here about 1.5 millions in purchases of calls 24K for the expiry end of the year, and he just bought 175 lots. That's absolutely not a lot. So custom strategy, that's going to be the next one. The custom strategy, we have 2 pages, If we check here the premium, something big happening here, not really. And the problem here is mainly you can have a multi-leg. For example, look this one. That's really a huge trade where you don't know what's behind. You don't know the context. It's not a standard strategy. Maybe it's just a risk strategy, a risk management strategy, just to reduce its loss for a main trade that he has activated. It's really hard to see what's happening here, but I'm usually just checking the premium USD. Sometimes you see a very relatively simple one. For example, this one, it's not a multi-leg. This one, he sold puts 22K for end of the year for $614,000 and purchased instead put 26K with an expiry end of October for $300,000. Means he received $300,000. That's it, the delta. So that's the first profit, let us say, the first cash out. And he still own now 500 lots for a put 26K until end of October. So if the price goes down, for example, at 26 or below of 26K, for example, until end of October, he can close this part and he is going to be the good winner. Maybe it's just a revenge trade after he did some loss and he is trying to recover some money. It looks like a little bit to me, but who knows? It's, as mentioned, custom strategy. Nobody knows exactly. So short straddle. Let us go to the short straddle next. Where are you? Yeah, here. So the short straddle is a very pain in the ass because it's just indicating no volatility will happen to the market, and that's what he's expecting, and that's where he is going to make money, because the only thing where he can make money with it is with premium, and that's what he does. So if we check, we see what they are expecting until the next expiry. They are expecting, and we have checked the max pain, it works very fine it seems, they are expecting 27K. So if the price maintains 27K, indicating we should go up soon after the expiry next Friday. So it would be, for me at least, and a good try. Just, why not? Just to try it. But the expiry is October 27th. We can go to 25 and then go up to 27. So that's always a little bit risk. But what he is expecting is we don't have any big volatility, maybe pump and dumps and so on, just to liquidate high leverage positions. But that's mainly it. So, and the put calendar, it's really simple and very boring because the put calendar is not saying anything. They are, if you check, they are selling, for example, puts 28K end of October and buying instead puts 28K for end of December. That's, in my opinion, just risk management, just indicating, okay, I'm selling there now for 300,000. I'm buying now the same strike with different expiry for 460,000. We will go and we will keep a price below 28K. So I will make my gain, but I guess he wants to make some premium USD as well. And that's almost it. So I would say matches very well to the market. That's very quiet at the moment. So if we check now what the market is doing here, we can see that's the CBD, as you know, that's BTC USDT on Binance, BTC USDT aggregated. We have the BTC BUSD, we should ignore that one, BTC USD, and then coin margin contract futures and stablecoin margin futures as well. So if we check that, we see that BTC USDT on both sides are declining, indicating they are selling more than buying. Even BTC USD was falling. It started to lift up a little bit right now. The only ones who are really looking very bullish are futures. Futures are up, indicating that's the main engine of the current price. That's lifting up in trend, even not big, but that's the whole thing. You can see what they did. Pushed up, long, then flip back to short, and that's what the price did. They did, I guess, a good gain. That's it. If we go forward, once again, that's BTC TUSD, for example. We can see that even with BTC TUSD was doing exactly very well synchronized. It smells like a little bit Cumberland crap here, but they did exactly the same with BTC TUSD. Maybe Justin Sun is behind, who knows? It's like a soap sometimes, crypto. If we check BTC BUSD, once again, you know the volume is declining more and more. It will disappear just in a few months, so it doesn't. We can ignore that. Bitfinex selling more, and that matches very well what we have noticed on unusual whales charts. They are selling more at the moment. If we check here, for example, BTC USDT on Bybit, also here they were just following what also futures were doing. Coinbase, for example, they started, for example, front running it at a price of 26.6, just indicating they started to buy more, then they sold a little bit more, and now they are once again back to the bulls area, so indicating they are buying more than selling at the moment on Coinbase. We see that BTC USD on Bitstamp did exactly what the market did here as well, like for example the futures, extremely well coordinated, but as mentioned so many times, it's not possible to drive the market only with futures. You need to use spot as well, and I think that's what they did. So Kraken, also here front running it. They are more bullish than bearish here. Gemini, exactly the opposite, but also here almost no volume happened. We can see here once again. Here's the volume profile, where once again the price bounced here. We can see what happened here, stablecoin margin contracts and coin margin contracts. So they were the main driver of today's pump and dump. We can see right now, let me just refresh because it's the funding rates, and now we see on Binance it's almost neutral, on BitMEX it's almost neutral, on Bybit it's even more bearish than bullish. On Bybit with USDC, it's the opposite. Deribit, it's extremely bullish. On Kraken, they are demanding more longs than shorts. On OKX USDT, it's neutral, and OKX USDC is extremely bullish, also here indicating they are demanding more longs than shorts. Even on coin margin contracts, on Binance they are demanding more longs, on BitMEX they are demanding more longs, on Bybit they are demanding more longs, on Deribit they are demanding much more longs, Kraken also, and OKX like Deribit. So someone using their own bitcoins as collateral for futures are extremely bullish. On stablecoin, where I would say that's the most popular instrument also by retail, they are, I would say, neutral. Some are exchanges indicating they are demanding more longs, and some others a little bit more shorts, but that's mainly it. Only Deribit and OKX USDC both are extremely bullish, also here demanding extremely much more longs. That's it. Let us go forward. Well, it's not it, because obviously we can, something went wrong as usual. Thank you, Crypto Quant. We can see here, for example, what happens to miners just sending here another 3,000 bitcoins, here another 3,000 bitcoins, here another 2,300 bitcoins, and today they sent another, how much? Show me. Can I? No, I can't. Not yet. I think it will appear tomorrow. I can't see that. Oh yeah, 2,300 bitcoins. So that's coming from miners, and the last big one was 6,000 here. That was just almost 10 days ago. So if we go forward, also here funds unchanged, declining a little bit, but nothing big. And if we go to the trading volume, spot versus derivative, it's indicating that today we had, well, it was yesterday to be honest, because it's a 1 day time frame. So I don't know, can I have, no, it's just 1 day. So it's from yesterday where it was indicating that we have a little bit less futures volume and a little bit more spot volume, but I think today it flipped back to downward, indicating that futures were taking over, preparing the open, the pump and dump, and that's it. So if we check here Coinbase, if we check the volume delta, we would see that Coinbase was mainly buying. Even when the price started to dump, they bought 126 bitcoins more than they sold, so indicating they used the opportunity to buy, while on the other side, while the price was lifting up, they sold more than buying. So also very interesting. You can see that's why the CBD started to lift up. So if we check now Bitstamp, BTC USD, almost nothing happened here. Very red here, red, indicating they just followed the price. BTC USDT, for example, we can see that they are here bringing more liquidity to protect, I guess. So obviously what I think we will see back something like 27, 26.8 or something, and maintain that here. That's the volume profile. That's our POC, our main POC at the moment, at that area at 26.5, where we have next Friday our max pain. So just to make it clear, so nothing to see here as well. BTC TUSD, also here, for example, nothing to see. They are, for example, waiting at 26.8, but at the same time also waiting at 25.8. On BTC BUSD, for example, they are blocking here 26, but as mentioned, BTC BUSD will drop even more in the coming month, so we can start to ignore it. Bitfinex is still blocking at 27.5, so I can imagine just I'm not sure if that's an algo that's it's pausing there. I'm not really sure, because it looks a little bit like this one looks more like a very, like a you know, just like a block or a border or a limitation to the upside. I'm not sure if this one, it's also the same with 530, let us say 600 bitcoins waiting here. It's not that low. BTC USDT on OKEX, also here, for example, OKEX was here selling while the price, so it was buying more. The volume delta was positive while the price was lifting up, and negative when the price was declining. If we check well, OKEX swap, nobody cares. Kraken, on Kraken they are, for example, at 26, waiting there. At the same time, sell positions at 27, 27.2, and even 27.3. Qcoin is they, for example, had here a sell position with 190 bitcoins at 26.6, was triggered. So someone sold at a price of 26.6, 190 bitcoins on Qcoin. Wow. Okay, not bad. BitMEX, the last spot exchange here, nothing to see. A lot of algorithm structure indicating that's I was a big fan of BitMEX, but after that here I don't like that. So Bybit derivatives, BTC USD, you can see here as well. So they started to liquidate here, it seems, some high leverage long, some people, I guess, some people, or even shorts. That's the big question. I can't see that, but minus 50 millions indicating they liquidated here. I guess they liquidated here shorts instead, high leverage shorts at a position at 26.7. BTC USDT, also here, for example, we can see that they liquidated a lot of people at the same price range, 26.6. But I think it was much more related to longs instead of shorts. Then BTC USDT, we are now only talking about derivatives. From here, for example, we can see that they liquidated 5,421 bitcoins. Well, it's open interest that declined, so maybe some closed their position, making some cash, and others were just liquidated. That's the big question, but I think once again they liquidated here 2,900, or we had less open interest. That's the open interest change of 2,940. So I guess they liquidated shorts here, and they closed some bulls just closed their or traders, not necessarily bulls, but they closed their long position and flipped to then afterwards to short positions, and then here as well they closed just the positions. BTC BUSD, okay, once again we are not going to check that. Bitfinex derivatives, let us check here. Almost nothing happened. Really nothing. We are talking about 2-3 bitcoins. So also here I think that's an algo, but they are limiting the way up at 27k. Here also nothing to see with Kraken futures, OKEX futures, for example. They are also limiting the way up at 27.5 at the moment, and KuCoin futures are, we have here a block at 25.6, but also nothing. If we check here, for example, they closed bitcoins worth $800,000, almost there, or close, or got liquidated, not really sure. And Deribit, and on Deribit, to be honest, also nothing big happened here. 2.8 millions, but absolutely nothing. That's it. So I'm not going to provide any kind of conclusion. In my opinion, it's very clear. We will maintain, in my opinion, a price between 26-27k. We will see. We will be very close to 26.5 until Friday. Then we will go up maybe to 28 to go and to start to hit 27k afterwards. Maybe we will go to 25 and then push up to 27, or we will go up to 28, 29. At the moment, short term, I would be more bullish than bearish. Even I still think that this market will show us its true face, because this year was even many would say it was okay. A lot. We had a huge drop in volatility this year compared to last year, And we had, in my opinion, I'm not sure, I don't have any kind of statistics, but my sentiment would say we had more pump and dumps this year than last year. Those were, I would say, in my opinion, were more driven by entities like exchanges just to make some cash, in my opinion. It's my personal opinion. And it's a very neutral year. I don't see any kind of big accumulation by entities. I don't see any healthy tendency by the market at the moment. And I'm very bearish on the market. Even I would love to see a bull run like we had in 2020, 2021, but I don't see that. I really don't see that at the moment. Maybe something will change. Maybe, they are pushing Gensler to approve a spot ETF. I'm even don't see that, because you can ignore everything, but if you are still reading the rejections of 2021, nothing have changed, because one of the main point that Gensler and ECC had at that time was tether and market manipulation. Tether is still there, and if you check that the market did today a pump and down while the market cap of tether was rising for short term at the same time, to be honest, to believe that the ECC, they can push, they can bring more political pressure, and maybe they will do it. But I don't see that. And I don't think that BlackRock don't really care. Many think BlackRock is the big player that will push to a spot ETF. The Wells Fargo, man, sometimes I say Wells Fargo, but it's Wells Fargo. So one of the big fours of the US bank landscape, and Wells Fargo and BlackRock are they are married, and Wells Fargo is extremely, they are part of the pilot CBDC, and to be honest, I don't believe on it. I when I see the context, when I see the links and the relation, I don't see that. They don't care. They use it maybe really just to sell their bitcoins or to make some big clients a favor or something. But in my opinion, that's my personal opinion. It's absolutely not part of my personal conclusion. But in my opinion, that's it. It's just my personal opinion. If you think different, if you have a different opinion, that's absolutely fine, and you can obviously share it also with me if you want. But in my opinion, everything is a big trap, and doesn't mean Bitcoin will disappear or the crypto market. I have mentioned since 2021, regulation hurts, and it didn't hurt enough yet, and we didn't regulate the market yet, and that's still something. It will happen, and that's not going to happen with the bull run. So big love, and we will see us next Friday.